Good morning, dear students. Let's continue with the next part of working capital, that is estimation of working capital. In the previous video, we have seen how to estimate the operating cycle for a particular company, where we tried to find out what is the duration of the operating cycle. Today, we are going to estimate how much is the working capital required for this estimated operating cycle. So, let's go ahead with the problem. A company has the following estimates. Amount locked up in stock is in stock. In that we have raw materials 16,000, finished goods 15,000. Average credit period. There are two types of sales in this particular company, that is domestic sales and foreign sales. So domestic sales, the average credit period is 4 weeks and total is 1,30,000. Whereas foreign sales, average credit period is 13 weeks and the total sales is 4 lakhs. Whereas the time available for payment is for purchases 8 weeks, 1,56,000 is the total, and wages 4 weeks, 3,90,000 is the total. Assuming 52 weeks in a year and 10% contingency, estimate working capital required. So this is the problem given to us. Now, before going ahead with the solution, understand one thing. There are 3 types of problems that may come for estimation of working capital. The first type is this, which you are seeing, where all the data is directly been given to you. You have to just use it in the format and get the answer. The second type of problem would be when cost sheet would be given, that is raw material cost is given, labor cost is given, overhead cost is given. There you need to estimate each and every current asset, that is raw material, finished goods, semi-finished goods, then debtors, creditors. All these things have to be estimated first and then used to calculate working capital. So, and the third part is when the same cost sheet is given in terms of percentages. For example, labor is 40%, overhead is 20%, and material is 10%. So if this case is given, then other details would be provided and we have to estimate the working capital. Now let's go ahead with this first type of problem, that is a simple problem where all the details are given to us. Okay. Always remember, working capital is nothing but current assets minus current liabilities, right? So here you take the current assets, from that you deduct the current liabilities. Okay, now how do you calculate this? Let's understand them one by one. Okay, so first is amount locked up in stock. First we have to consider current assets. So current assets are given over here. Under current assets, the first one is amount locked up in stock, that means inventory. Under inventory we have raw materials. So amount locked up in raw materials is directly been given to us, that is 16,000. So we take it directly, we do not do any calculation for that. Next one is amount locked up in finished goods. So finished goods 15,000. Next is debtors. Now for debtors we have to see the average credit period. Okay, so average credit period. Under debtors we have 2 types of debtors, one is domestic and another is foreign. So we have to do the calculation separately for domestic and separately for foreign sales. First let us consider domestic sales. Now domestic sales, what is the total sales? It is 1,30,000. So 1,30,000 is the domestic sales for the entire year. Do you want it for the entire year? No, you want it only for 4 weeks, right? So 1 year consists of how many weeks? 52 weeks. So this 1,30,000 is for 52 weeks. You want it only for 4 weeks. So how do you do this calculation? 1,30,000 into 4 divided by 52 will give you the debtors for 4 weeks. Okay, so 1,30,000 into 4 divided by 52 gives you 10,000. So your debtors for domestic sales is 10,000. Next is foreign sales. Now what is given about foreign sales? The credit period allowed is 13 weeks and total foreign sales is 4 lakh. Now 4 lakh is for the entire year. I want only for 13 weeks. So how do I convert it? It is 4 lakh into 13 divided by 52. Okay, or in other words, for 52 weeks it is 4 lakh. For 13 weeks it would be how much? If you remember the cross multiplication, I'll just do it over here. Okay, for 52 weeks it is 4 lakhs. Then for 13 weeks it would be how much? So how do you do it? It is 4 lakhs into 13 divided by 52. The same thing we have done it over here. Okay, I hope you're clear with the logic behind this particular calculation. Okay, so 4 lakh into 13 divided by 52 gives you 1 lakh. Now you have to check if there are any other assets or current assets in the problem. There is raw material, we have considered that. There is finished goods, we have considered that. Domestic sales, we have considered, that is debtors. And foreign sales also is considered under debtors. Then purchases, wages, this is time available for payment. That means they are not current assets, they are current liabilities. So there is no other current asset. So once you find out that there is no other current asset, you have to take the total of the current assets. That is raw material 16,000 plus finished goods 15,000 plus debtors, domestic debtors 10,000 plus foreign debtors 1 lakh. So total of this comes to 1,41,000. What is this 1,41,000? That is the total of current asset. That means it is gross working capital. Now once you calculate the gross working capital, next part is the second part, that is current liabilities. We have to deduct the current liabilities. So under current liabilities, what all we have? Time available for payment. That means you are delaying the payment, and what is the time available? That means it's a liability. So what are the two current liabilities that we have? We have purchases and we have wages. Now purchase, time available means what? They are creditors. I hope you are understanding this. That means you have purchased goods and you are going to pay it after some time. So time available for payment is 8 weeks. That means you are going to pay it after 8 weeks. So right now they are creditors to you. So creditors are current liabilities. So how do you calculate creditors? So creditors purchase 1,56,000 is your total creditors. You want it only for 8 weeks because the time available for payment is 8 weeks. So 1,56,000 into 8 divided by 52. I hope you're clear with this 52. 52 is the total weeks in a year, which we have already discussed. Okay, so 1,56,000 into 8 divided by 52 gives you 24,000. So your creditors, estimated working capital for creditors would be 24,000. Next, after creditors, next one is wages. So time available for payment of wages, that means they are outstanding wages. Outstanding wages again becomes a current liability. So outstanding wages, what is the total outstanding wages? It is 3,90,000. But do we want total? No, we do not want total. We want it only for 4 weeks. So for 4 weeks it would be how much? So 3,90,000 into 4 divided by 52 gives you 30,000. So we are done with creditors, we are done with wages. Now what is the next step? We have to find out the net working capital. How do you find out the net working capital? It is gross working capital minus current liabilities. So what are the current liabilities here? 24,000 and 30,000, that is 54,000. So 1,41,000 is your gross working capital minus 54,000. So 1,41,000 minus 54,000 gives you 87,000. Now what is this 87,000? 87,000 is your net working capital. I hope you're clear with this calculation of 87,000. I'll just repeat. It is gross working capital, that is the total of current assets minus the total of current liabilities. So 1,41,000 minus the total of this, that is 54,000, gives you 87,000. So 87,000 becomes your net working capital. That's not the end of the problem, because in the problem they have said 10% contingencies, assuming 52 weeks in a year, and 10% contingencies, estimate working capital required. Now let's understand briefly what is this contingency. Okay, first of all, you are estimating working capital, right? So it is an estimate, it's not accurate, right? So it is estimation. Estimation may be correct, may be wrong, it cannot be 100% accurate. So to avoid the problems in future, you have something called as contingencies, you keep something called as reserves. If in case more working capital is required, you're ready for it, so you create something called as contingencies, right? So contingencies are always calculated on net working capital. So here in this problem they have given 10% contingencies. So 10% contingencies, that is 87,000, which is net working capital, into 10 divided by 100, that is 10%, is 8,700. So your contingencies are 8,700, which has to be added. So 87,000 plus 8,700 gives you 95,700, which is your estimated working capital. So this is how you estimate the working capital for a particular firm, by considering current assets and current liabilities, less current liabilities. Okay, so I hope you're clear with this simple problem on estimation of working capital. In the next video, we'll try to do one more similar type of problem which will help you to understand this concept clearly. This is the basic problem on estimation of working capital. Thank you. Have a good day and a great learning.